Test. All right, I'll do it like this, guys. I don't know what's happening. I think you will hear me a little bit softer now because I'm doing it through my. Oh shit! I know what's going on. My AirPods are empty. That explains. All right, so I'm just gonna do it like this for now. I'll probably charging my AirPods now. They should be good in a bit. Well, or it's not. Or it's not, and it could just be doing weird. Whatever. It's working for now. Yeah, it's probably my AirPods being empty. Well, what do you know? Luckily, we can make it. Man, guys, good to see a nice show up. Awesome. I guess that's also the benefit of doing it later in the day. What's up, Auke? What's up, Tim? What's up, Robin? That's 3 Dutchies for you right at the start, if I'm not mistaken. Billy Borg, good to see you, man. Rafa, Hori. What's up, everyone? Okay, let's dive into it. I wanted to use this session right here to dive a little bit more into the statistic dashboard, into the features itself, and specifically into the release of this week, early this week, where I released some additional features. And then I think I especially want to talk about the filter mode, although I'm not going to go too deep into filter mode because I think explaining it without any visuals or whatever is going to be quite confusing. I wrote a humongous article, or what, not humongous, as compressed as possible, but I wrote a tutorial today. I posted it in the channel, and I think that one, I will not be able to explain it better than I wrote it there. I'm going to make a video tutorial version of it as well, but for now, I do think that is the way to go. So right now, what we're seeing is, first I'm just going to do some analysis, and then we'll naturally flow into things. And let's check it out. So first of all, I want to see where we are. It's obviously later in the day, so I want to see how much displacement we've had. We did see a negative displacement, and we had some negative. Oh, okay, so this is exactly what I want to see. Let's see if I do have it filtered. So what I was looking for, what I wanted to look for, because now it's later in the day, and one of the reasons why I'm doing it later in the day, because I also wanted to dive into 4 hour and 8 hour statistics, and now it's 5 p.m. You know, so the 4 hour and the first 8 hour had over an hour to gather some data. But what you want to see is that this one still needs to be a little bit higher, right? Because if this one is already exhausted, then continued downside makes less sense. I mean, let's see how many exhaustions we already have by deselecting the filter on the right. And then we will see right here. Not too bad, not too bad. So there's definitely still potential to go down further. Let me check the multi-time frame page. So this is what I wanted to see. And I do want to make a remark. I do think also one of the, it's still like Bitcoin. I told this already. I'm not touching this with a 10-foot pole, but I do think there's a reason why right now today we had some more downside, whereas yesterday we did not. And yesterday on the stream, we also said, okay, let's not focus on that downside too much, or at least be careful. Because yesterday we were here, and today we were, well, not exactly at the top of the range, but we were more up than we were yesterday, right? So there was a little bit more room to go down. There was some local liquidity. We had that fair value gap right here. We had the fair value gap here that immediately got filled, but then we still had this one. So there was some more reason to go down yesterday. Obviously, we took liquidity, but one of the main things I really like, and it's also what I posted in Discord, that I like the high better. And this is something I'm going to write a tutorial about soon. But I mentioned this now a couple of times. For example, here, and on Bitcoin was not even too bad, but the pivot was right in the middle of a down move. And here you could see that it's more, it is, a pivot is always better if it's not like this. So here, the pivot, I explained this yesterday in the stream. A pivot is always better if you have something like this. And the pivot is either here or slightly below it, or it could also be, you know, that you put some local things like that, and then you have it here. The main gist of it is that you capture some liquidity, and right here you can see you are capturing some liquidity. You just finished grabbing this liquidity right here, and then you grab this liquidity, and then we can go down from there. So when we were here, I think things looked a little bit better. You've seen the post in the Discord, so I'm not gonna repeat them, just gonna waste our times. But in the Discord, I mean, I'm personally still hesitant as long as we're in this range. I think it's very much in hard mode as long as we're in this range. But if you want to take a short trade, then obviously it's better. So here, for example, the context is important, right? But here, for example, we were at the low of the range after this whole move down. And here, at least locally, you took some liquidity, right? So then obviously this is, for me, when we were here today, and we had some bearish signals across the board, that looked like a better setup than what we had yesterday. But that is the history now. I do want to go over one more really cool example that I do think is very cool. I explained this in the Discord today. I'm just quickly grab that one where I said, all right, let me just open that one like so, like this. Of course, it's too big. Since we're going over new strategies. So, all right, let's go over it. So this was at 12:17. Here's an interesting idea for a new strategy using this new feature. We can order the time overview table on the second day since P1 columns, this one, in descending order. Then find assets that also have a high value for day since P2, this one. A high value in these columns means that both P1 and P2 have not been put in during the current P2 hour for a very long time. For example, we see here for ETH that the current daily P2, the daily low, is put in during hour 6, and that's been on the 76 days since we did a P1, P2 flip. Blah, 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 blah. I want to actually look at this one. Similarly, we can see for Sushi USDT that it has been 150 days. So you see that right here. I can show you that. This was from this morning, right? So Sushi was 150 days since so current P2, hour 3, right? It has been 150 days since that's been a P1. So this is just not happening at all lately. And that's why this column is so valuable, because this 10% would actually indicate otherwise. But this just means that recently the trend has changed and it's not happening recently. And days since P2, so 471 days. So right now the current daily, or this morning, the current daily low was put in at hour 3 UTC. It had been 150 days since that would perform a P1, P2 flip. And it had been 471 days since that daily low, or in this case, the P2 would remain the P2, right? So both of these are very low probability. And that's what I say here. This indicates that also this asset has a daily low that is a very low probability pivot. So it is a very interesting use case that I didn't really see coming. So this is also very nice. We still see plenty of room to go on the daily, right? This is kind of what we saw, although I do have it on hybrid. If you do conservative, let's see what you get then. Probably a lot less signals. Yeah, but still more bearish than bullish. I do like the hybrid approach, but this is going to be better for trending markets. I'm going to dive into it a little bit more later. But to go back to this one, so what that approach is, and we can still do it, is that you order this one of days since P1. I mean, now this is going to be less relevant. I think it's especially relevant earlier in the day to order this one first, but let's have a go anyway. Then we can see if there's any that have both a low probability P1 and a low, or a high value for this one and a high value for this one. So this was the case for Sushi this morning. Right now we don't have them. I do think it's going to happen more often when you're at like a P2 around London. But this morning we had it, right? This one high and this one high, which means that the current P2 is a low probability of becoming P1 by flipping the current P1. In this case, that was the high. And it was a low probability of becoming P2. So this strategy, and again, what I'm doing also this morning is thinking out loud, but intuitively and logically, it makes a lot of sense to look at it this way. But what I was saying in the Discord as well is that this strategy, you can look if there's confluence with the distance data, but what we saw is that there was none for sushi, right? 55% P1s with a bigger distance. So we could not already confidently say that sushi was going to hold. Now here lies an important takeaway that I do want to discuss. And after this, we will go into the current price action. Let me just remove this one to this. All right, so this was around here, right? We had P2 right here at the low. I'll mark that out. So price was still pretty close together, and this is also why our P1s with bigger distance was 55%, because we were simply, this P2 was not that far away, right? So we could not confidently say in terms of distance statistics that this one was not going, or was that this was going to hold the P1. However, by using the filtering we applied, we saw that both this one and this one didn't happen for a very long time, right? So in conclusion, the very simple conclusion is that this as a pivot is very unlikely as either the P1 or the P2. So given that, you know, the other option, this is what I mentioned as well, would be something like this. But if this would hold, then obviously this one is a very low probability. And there is obviously, since this is our zero, a good chance that this one is not going to take out this before going lower. But regardless, taking this out made a lot of sense. And by this time you're here. So what I was saying is, what you also have is still a very high value for percent of days with more distance, right? So at this point in time here, 91% of days had more distance for the whole day, right? So we had this right here, 3.75% displacement, and 91% of days have, or negative days have a bigger negative displacement. So naturally, that is a very, very interesting play for us, because we have determined using not distance statistics, but just how long it has been since this put in a pivot, that this is, you know, at least in the trend, a very low probability pivot, both for P1 and P2. Therefore, we say, well, this is likely not to hold. That means that if you can enter here and you target the daily low, that we have way more room to go. So if you're later in the day, and, for example, this does give a good probability for not holding, then naturally speaking, you're also going to have a worse risk to reward. You're going to have more confidence, but less risk to reward, right? That is the trade-off that you're making. And in the end, you know, it really depends on your trading system. I'm not saying that the other approach is wrong. It definitely is not. It is a very good approach. But, you know, new features require evaluation of new methods, in my opinion. So, you know, what you could do, even if you go at the 0.5 and you have your invalidation above the P1, you, in this case, you know, of course, it makes sense to take a first TP here. But if P1 holds, then naturally you could target a lot lower, because you know that 91% of days go lower, which means that you have a very high probability to not just tap this if P1 holds, but go a lot lower than that, right? So very interesting approach. And that already covers one of the new features, right? Which is this one. I personally think it's really cool. Day since P1, like right now, we could also, for example, filter on this one. So here we have a couple of P2s that didn't happen for a long, long time. And what you can then do is get the, I would say the top 3 in this case. Select those, shift select, and then see the statistics here. But then you can see that pretty much all of them, well, I can press conservative. Oh, no, Matic actually looks pretty good. But pretty much all of them have pretty decent statistics. Let's put it on conservative. Then Dusk still looks great. So here you have Dusk with only 11% of days on conservative, which is, as the name suggests, the most conservative method. Only 11% of days with flip P1, which is a daily high, and 136 days ago was the last time hour 6 was P2. So that likely still needs to go. The only thing is that we don't have the retracement, but we did have it, right? We did have it. We don't have it now, but we did have it. And you can also see that this price is nicely trending, which is something you want to see. I don't think the retrace came that. Oh, I know it did. It came to the 0.5. And for me, the 0.5 is a very, very nice area. I like the 0.5 personally. I know a lot of people want to wait for higher, but in my experience, the 0.5 is if the trend really continues, then the 0.5 is an area where you often reject from or bounce from, depending on the direction. So, you know, that's and by the way, I personally think that a 1RR strategy could work very well as long as your win rate is high enough. Although I know that's an unpopular opinion nowadays because everyone wants at least 2 to 3, 3 to 1 RR trades or 2 to 1. But I do think you can make 1 to 1 RR work as well. But either way, you know, you can see that selecting on this, it makes it very easy to just check out which P2s or which P1s are very low probability based on simply the last time it was put in. So that one is actually pretty cool and more useful than I thought it would be. More useful than I thought it would be. All right. Tim, could you check how the 4 hour is now in case of the new filter? What do you mean? Like, did I check the new filter? Or how it is when I use the new filter? Not any difference. Oh, no, there is a small difference. Yeah, so I don't know who already read the tutorial. On this filter mode. Now I'm wondering because I released this tutorial today, but I understand if you haven't read it yet. It's pretty intense. I'm not gonna lie. But considering we are still strongly bearish, I think I would prefer to give more weight. Well, I want to say to bearish signals, but if I look at this, then so far it looks better for the bulls. Let's see, Doge, it's bullish. Both a low probability P1 and a low probability P2, with low P2 being even more low probability. High probability P1 on Bitcoin already. And Bitcoin is up, very low probability of going down. Yeah, I would be inclined to say, I mean, Bitcoin is king, right? And for now, it looks like Bitcoin wants up. So let me just double check that. Because that assumes 22.8 on conservative. Let me remove this one. Even go to the 1 hour. Right, not saying anything. All right, so we have BNB that's looking bearish, we have Doge looking bullish, and we have BTC looking bullish. I personally think Doge is looking pretty good. That's why. But the one thing you don't want to see is a tight range. Yeah, so this is exactly what I didn't want to see. This is pretty much the same. Well, there is a little bit of space to move, but not really a lot. I would say that Doge is now less volatile than Bitcoin. But we don't have the wick at the bottom, so this is not something you want to see. Oh well, we have a very, very tiny wick, very tiny wick, but generally not something I prefer to see. And especially since the daily time frame is still down. So I don't think I would go for bullish signals here for the very simple reason that the daily time frame is down. Still showing quite some strong potential to go down for the rest of the day. I do think the daily heights look good, you know. So for me, is what I always say, if I see strong bear signals, I am not very willing to go against that. Well, Bitcoin is at exhausted bear, but there are still quite some exhausted or strong bear signals. Especially, and if the, for now, let me just put it like this: if the daily high holds, then using hybrid is a very, very valid approach for looking at the daily time frame. And then it becomes even more bearish. Basically, what hybrid is doing is that it's including all data if the P1 is at hour 0 or 1. So right here, which makes a lot of sense because the current P1 is at hour 0. And it's looking pretty good as well in terms of PA. So for me, this setting right now makes a lot of sense. If you have any questions about that, I'm definitely willing to go over it. If you haven't read the tutorial, I can give it a shot to try and explain it. But so we can see even more strong bear signals. And for me, I always have a golden rule. If I see this many strong bear signals, I'm not going to take any trades in opposing direction. Because you have to understand that we are now in the last 8 hours of the day. That means that if this bias is going to play out for the current day, right, where we have some remaining downside to go as it looks like on some assets, then that has to happen in the next 8 hours. So if we would now long a 4-hour candle, that would basically give us that, given that this is going to play out, we would be betting on that this current 4-hour candle is the one that's going to be bullish and the next one is the one that's going to be bearish, right? I would have preferred to see a little bit higher up like this, and then, I don't know, some move down on the start of the 4-hour that we could short, because that would be in confluence with the daily time frame. Right now, we're not seeing that, so therefore, I am personally not very inclined to take any bull signals at the moment. And for now, we don't really have a lot of signals on the 4-hour to begin with. We only have the 3 that we set: Doge, BNB, and BTC. And then BTC and Doge are looking bullish, but also not, 1 out of 5 times it would it would perform a flip here. Now let me see. Here, for Doge, it's been 3 days ago to do it from this P1. And for BTC, it's been 9 days ago. It's also not something that you would say, oh yeah, that never happens, right? Like, it happens quite a bit. So let me just check something else. Yeah. So for me, I don't really see anything here that is really if the daily time frame was bullish or like way more exhausted, then I would have loved to take a shot on that. But now I do not. Let's see if I press hybrid on XRP. And LTC. So I'm more inclined to look for bearish signals right there. But like I said, Bitcoin itself, yeah, I wouldn't touch it with a 10-foot pole. I just think it's very, very choppy. Very choppy. So you want to look for other assets. So if I now check XRP, yeah, kind of same thing. Right? It's very, very compressed. Although this has potential. But I don't like, so I will immediately discard this because I don't like the pivot right here. It's basically what I explained earlier. Right? You're just going down and then there's a pivot right in the middle. I just prefer not to take it. I've seen it gone wrong more often than it gone right. So not interested in that one. LTC. Let's see if it looks a little bit different. Oh yeah, so this one looks a lot better, but obviously we have no retrace. For the simple fact that it doesn't have that pivot right in the middle, right? It has that little, it doesn't even have to be much, but it has this little retrace, which will become more apparent if I switch to the 5 minutes. You can see here that it took that local liquidity and then continues down, right? This is something you prefer to see rather than what we saw earlier on that pivot on XRP. So this one looks better to me in terms of PA, but obviously there's no retrace now, so we would have to wait for something like this to happen. The most ideal scenario which you can happen at this time, unfortunately we do not have it now, but you know, we're also a little bit dependent on the market gods, and they have not been very kind to us. But the most ideal scenario is something like this would happen, and then this would trigger 8-hour and a 4-hour bear signal. Now that would be great because then you can enter here, take the 4-hour high and the 8-hour high as an invalidation and look for lower, right? If the rest of the market gives you the confirmations. Right now we do not have that yet, though. There's really nothing going on the 4-hour and the 8-hour. Might be fun to look at some 1 hours though. There's nothing is happening anyway. So that's the thing I would look for, right? Wait a little longer. There's nothing now on the 4-hour. There's nothing now on the 8-hour. I mean, here you don't want to short anyway. The best thing that could happen is something like this, right? And then you short there, go down lower if the 4-hour and the 8-hour are showing downwards. But let's look at the 1 hour because I actually think with the new updates that this is going to be, I cannot say for sure how tradable it is, but I do think it is going to be more tradable. Wait, I have the wrong one selected. This should be it. For example, let's look at bulb. Bulb. This this is just fun and games. Oh wow, the P1 is actually damn. That's crazy. It's been 52 days since this hour put in a P1 during the first 5 minutes. That's quite nuts. So not what I want to see. Wow. So that means that this particular candle is not putting in a P1 at hour 17 UTC for quite a while. You can see it all around, like in most assets, you know, except for Wildcoin, CRV, and all that. But other than that, it's looking like it does not happen a lot. Good to note that this does filter on just 1 hour. But still been 56 days. Let's just check what the 1 hour is doing. Yeah, well, the statistics themselves are looking good for further upside. These statistics, maybe not these, but these statistics look good. These statistics look good. So at least for the next hour, and this is also something. I mean, this is obviously very on the lower time frames, but at the very least, you can use it as an entry or a stay out signal. So for example, now if you would be looking for a short and see the 1 hours are pretty much pointing upwards, then I mean, does it make sense to enter now? Although at some point, it also depends on where your what your RR is. But right now, if I'm looking for a good entry, then I could choose to wait. And especially because the 4 hour has not given us anything yet, right? The 4 hour is not giving us anything. So given that nothing is happening on the 4 hour and nothing is happening on the 8 hour, and the daily, let me check the daily one more time. Greater than 55%. Yeah, so there's also here no retraces yet. So see, this is the problem. So here, all of them are saying that pretty much all the assets are at the lows or close to the lows. So except for this one. I mean, let's check it out. Why not? MNT. I don't know what it is. I've never heard of it. I know I added it, but never heard of it. Yeah, no thanks. No. So see, if you see this, I wouldn't touch it. Like this is a very tight range right there. Very, very tight. Nothing's happening. No volume. Just came from the bottom of the range. And even here on the lower time frame, even more compressed. Right? Look at that. It's like a mini range within a mini range. Micro range within a mini range. So immediately discarded. And there's and the rest of the assets. So there's still like a downside in play, but the entries for now were earlier in the day, which were already bear signals. But for now, it doesn't seem like there's a lot of good entries. So unfortunately, there's nothing we can do about that. And it brings me back to our initial point that the hope is that in this 4 hour candle, you're going to have a 4 hour bullish candle. Or, that you're going to have a bearish signal flashing, but that it then has a retrace so that you can short the 4 hour. Because we do know that it's likely that you're going to go lower, especially if you take all of these. Shift selecting all of them now. Not very low probability, except for dusk. But if you see all of them, you know that there's a decent probability you will go lower. Then it would be lovely to see if now you have a little bit more downside, enough to create a 4 hour, 8 hour bearish signal, retrace a little bit, and then enter on that. But it's just a wait and see game. It is what it is. The market is very boring right now. And that's also, a part of trading. It's also realizing when not to take any trades. And, right now there's no trade at this point in time. If, again, well, not on this shit point, but I don't know, on dusk, for example, if something like this would happen, and this would be enough to create a 4 hour bearish signal, let me just put it like this. Well, dusk is definitely the wrong one to show it to because it's also looking horrible. But say you do something like this, and then you can enter here, knowing that and the daily and the 4 hour and the 8 hour are pointing down, right? That's kind of what you want to see. But at this point, it's just wishful thinking. We can only react to that, and we don't have it. And as I said, the current hour is looking like higher, right? That's also saying, and there it goes, right? The current hour is going higher. Nice. We were just looking at bulb. And there we go. And so if you know that the current hour is going higher, then at least it doesn't make sense to short. But even if it wasn't, doesn't make sense to short the daily lows. Let me quickly check if my AirPods are working now. All right. Test. Yeah, now it's working. There we go. Or did I not chat? Wait, let me check if I did it. Yeah, okay, now it seems to work. Awesome. It seems to work. So this is actually pretty cool. We see the 1 hour now going up, right? So you can see that because I made quite some changes to the 1 hour. The 1 hour is the one I made the most changes to in the background. For example, selecting the individual hour, some other changes to the filtering that I made for everything. But the 1 hour is the one that's definitely more accurate now. So it's funny to see that right now we do see that upside. Just waiting here. So we see that upside, right? And we had these strong bull signs here at a couple of ones, and we are now seeing that. So it's funny. I mean, for me, just amusing to see that play out on a time frame as low as the 1 hour, which is pretty cool to me. And we have some more room to go. So right now, what we can see is that. I mean, maybe if you're a scalper, you can trade this. I cannot, but it's definitely good for direction. And I know some people use the 1 hour. But for example, now we are a little bit. I mean, we're already too far in the 1 hour. But if I select these, you can see that a lot of the assets that have now current 5 minute P2 here, it's been a long time since they have been a P1. But this one is not correct, so I think I need to adjust this. I'll fix that after. That's what I'm thinking about now. It's like this can never be 4.1%. It must be higher. So I made a mistake on this one, but the rest looks legit. Yeah, the rest makes sense. But so, there's a very low probability of going down and nuking down this particular hour. So you can go as low as that. I saw Robin say that before. CRV looks the same. Oh, yeah, CRV does look the same. Kind of looks the same as sushi. Very similar to sushi. Let's just check CRV. Yeah, also strong bull on the hour, but other than that, nothing much. Daily. Yeah, not too convincing. CRV, I wouldn't know if it would have to go lower. To be honest, would not know. But the 1 hour is also funny that it's showing upside, and right now it's already playing out, right? But so you can definitely use the 1 hour. So for example, if I would be looking for a short and I see all the 1 hours that strong bull, then I'm not going to short. It's pretty much what happened here. All right, so there's not much going on other than that. I would not here yet take any shorts, to be honest. There are some fair value gaps down here, but we tapped the first one. Yeah, I would not take any shorts, not on CRV at least. 58.6, not very convincing. Oh shit, I'm looking at the wrong time frame. Sorry. 68.6. Okay, that's better, but this one is not that convincing. And this P1 also doesn't look too convincing. Our 8. Actually, the current second pivot almost looks a little bit better. No, maybe not. Maybe not. Yeah, so but we are getting a little bit of upside. So if there is an asset that has really good statistics on the daily, then and we do get a little bit of a retracement, then it's worth looking at. But right now, it's not that time yet. Let me see this. No, none yet, but getting a little bit higher, right? So here's zero point 0.3 on Rune. Rune. Yeah, what I'm doing. So 67% of the days would go lower from P1 to P2. We have P1 at hour 0, it's really good. P2 at hour 15. It's not the weirdest P2 in the world, especially if I select the 3 hours. So here I look at 3 hours instead of 1 hour, which I personally like to do in these cases. And yeah, this is simply not a very weird place to put in daily load. To be honest, I would probably not take any trade for the rest of the day. The market is super volatile. We've already had a drop, which is more than we can ask for once. I do think in this case the trade was later in the day. We are very, 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 very range bound still. We were just at the lows of these range. So, we are seeing still that lack of volatility, that lack of follow through. And if you go on the daily, for example, and look at this, and then you just kind of eyeball the daily candles, and you can see that, they don't get much bigger than this lately. I mean, this is like some of the biggest you will get, like this, this, this. This was deviation. And here, it's just becoming more and more contracted. You can also see that in the volume right here, which is kind of like sloping down right there. So, I would really like for us to have like really nice bearish statistics for now. But to be honest, I think the market is just not ready for it yet. So in this case, I would just let them go. I wouldn't take any trades in this environment. It's just we need to break out of this range, man. Like this range is really the most. I cannot remember the last time I've seen such a compressed range. The last time we probably had it was somewhere here, where we had also a very, very, very compressed area, right here and here. That's kind of what we're seeing right now, and we know that look at what happened last time when we finally breached out of that. So here was actually terrible. We had it here, and then you're like, oh, finally we're out of it here. But then he had it here again. But then look at what happened, right? We had this amazing. I mean, this was an unprecedented. How long was that again? Like 200 days, or let's take it from here because this is where the volatility began, in my opinion. 182 days of just volatility. If the market is like this is going to be awesome for us. I mean, this is extreme, but it doesn't have to be this extreme, obviously. But the market is like this is going to be awesome for us. This was already awesome for us. I don't know if you remember, but here, shit tons of plays to be had. But right now, as long as we're in this range, man, I would be very, very careful. I think today it looked pretty good for a play down. But in this kind of area, I personally think you want to be very, very aggressive with your profit taking. So even though there was like a trade to be taken earlier today on a lot of assets, I do also believe that by now you probably want to be fully out. And I don't think it's a good time to now place our bets on this further displacement playing out after we already went down and we are in a very contracted area and volatility is simply lacking. So my conclusion, unfortunately, is, or not unfortunately, it's just a part of it, that right now I wouldn't do anything because price is simply ranging. If you haven't seen it, then check my tutorial on this where I explained why you want to look for ranging. With that said, I've already hinted towards it. I am going to work on statistics that's going to be useful to us even in ranges. And I actually already started it.
I actually started just now. That's why I was a couple of minutes late. And I am not going to tell you yet what it is because, yeah, sometimes I think surprise is good. But I think it's going to be very cool and it's going to be more useful to us as well in ranges. And it's just, well, it's just the first step. And also, what I'm going to do is create a statistical indicator that can tell us whether we're ranging or not. I'm not really sure how we're going to do that yet. I would love to hear some opinions if you have any. But for example, I could imagine that using EMAs would be a very good one. For example, if the daily is ranging, I can imagine that on the 4 hour, we will have, a lot of crossovers, as you can see right here. So if you have more than, I don't know, X crossovers within 10 candles, I think you could, or I don't know, 50 candles, let's say, then I think you can conclude that you're ranging. It will probably be maybe some Bollinger Bands or some indicators to determine whether price is ranging or not. This will be very useful because it will A, tell us on the summary page or in the dashboard. For example, we could see now these statistics, but we could have another column that says, trending slash ranging, and then says trending or ranging, which will help us because then we can immediately see. So what we have to do now is, we see this. It's not too difficult, right? It's you can really easily, like for me, I go here, Bitcoin, I immediately see, okay, it's ranging. I'm not gonna touch it, whatever. But it would be even more awesome if we can go here and then just see whether it's ranging or trending, because then we can much faster find those uncorrelated assets. So that's the second thing I'm going to work on. But first, I started with the other statistics, which I'm just very excited about making. So that's why I started with that. And I think it's going to be very cool and also very useful. And like I said, I already started. I was planning on starting next week, but I couldn't help myself. So with all this nothingness going on, I do want to take the time and explain a little bit the new filtering method, the hybrid filtering. I am gonna grab my tutorial here and go over it a little bit. But I do hope you see, by the way, the method we discussed earlier with these one, that you filter on this one and this one. That one is very nice. I mean, you could even do it on the 4 hour. I'm just thinking that now, because we're 2 hours into the 4 hour. So that this method, yeah, you do want to use it like 50% or 30 to 50% into the candle, I would say. If, for example, you have GLM with a very low probability P1 and a low probability P2, although I would like to see it a little bit higher, to be honest, but this is still pretty good. And we can check the distance statistics. We have the current 30-minute P1 on the second 30-minute block. All right, so this doesn't have a lot of good statistics for that one, but like I said, it is up to you whether you want to live up to having confluence with distance statistics or not. Oh, that's not the right one. GLM right here. Yeah, we already took it out immediately just now. That can happen. That can happen. Yeah, nope. There's really nothing to trade right now. Nothing to trade. So let me talk a little bit about the filter mode and let you guys don't want me to talk about it. Yeah, and so I'm just looking at something, and the new feature I'm going to build is also going to be useful in these kind of situations. So that's going to be really cool. Therefore, I'm doing it, right? Because right now, I mean, it is also a part of trading. Sometimes you cannot take trades, but and I do very much believe that it's way better to master one strategy first, continuation trades, ranging trades, whatever it is, and then only try to, once you master that, go to the next one. I think the mistake people make is trying to master all market environments. It's simply not the correct approach. But But of course, if you're there, it would be nice if we would have some. Oh, and we did also touch the naked daily point of control down here. But it would be nice if we have statistics for both environments, and the new statistics I'm making also lend themselves a little bit more for this environment. So that's going to be really cool. But the filter mode I want to talk about, in case I don't know who has read the tutorial, but I'm gonna just pick it up there, open it here, because I really have to use some images with this. So if you do not fully follow along, check out the tutorial on the Discord that I posted today. But let's get into it. So before this week, we didn't have any filter mode right here, right? So what we had last week is that we had pretty much always on the background, we had conservative filter mode. And this conservative filter mode has changed compared to last week. On last week's stream, I explained what exactly changed. Very briefly put, there's less clusters. There's simply hour 0 and 1 in case of the daily time frame. I'm on the 4 hour. There's simply hours 0 and 1. On the summary page, until now, there's always been some kind of filtering on the background. What is happening now is that conservative filtering has become simplified, which means it has become more accurate. I've done some testing, I've done some thinking, and I do believe that the new filtering is more accurate. But what you have to understand that before this, what happened is that pretty much it was some variant of conservative filtering on the background. The thing that changed is that right now we can choose to not apply any filtering or apply hybrid filtering. I'm going to get to hybrid filtering, but let's just stick with conservative filtering and no filtering. So if we go to the distance page and I go here, what happens is that if I press filter mode manual, or on the summary page, this is the same as none. If I have nothing selected, what it does is that this approach does not filter out any data based on when during the day P1 is put in. Because as we know, we can, like if we have manual, we can select, okay, I want to see only how far P1 is from the daily open if the P1 was put in during hour 0, for example. And then you will see this data gets filtered, and we will only have the data points for when in the day or when a day put in a P1 during hour 0. Right? So that is simply what we can look for. For example, we can say, okay, I'm only interested to see when in the day, or I'm only interested to see the days when a P1 was put in during the afternoon, right? So this data now is showing how far. So what this metric is now showing is that right now P2 is 3.8% below the daily open for Bitcoin, and only 12.2% of the days that put in a P1 during the afternoon, right? During the afternoon, did we put it in this far, right? So it's a very low probability. If even in the afternoon, which is generally faster, this is your metric, then yeah, very low probability. Whereas if I select everything, I am looking at the whole probability, or all the data, including all the hours that came before it, right? Now, what you have to understand, as you see in this line here, is what this is showing is that basically the further in the day P1 gets put in, so the later in the day P1 gets put in, so these are the hours of the day, and this is the average distance that hour puts in a P1 from the daily open. The further in the day you progress, the more likely it is to be further away from daily open. And this makes sense, right? Because price has more time to develop. If we have price action right here, then obviously by the time we are here, prices have less time to move away from the daily open than here. So if we put it in here, then naturally we can have seen that, go something like this. And usually this doesn't happen from, hour 1, so to say. So that's why this is going up. And that gives us an important piece of information, right? So, okay, like if it's earlier in the day, it happens more often. Not only does it happen more often, it also happens closer to the daily open. That's probably what I should have started with. So here you can see that hour 0, if our P1 gets put in at hour 0, it is generally closest to the daily open, which means that if we put it in here, if we put in a P1, let me get this off. If we put in a P1 here, right here, it's generally the closest to the daily open, right? Where the daily open is this. And it makes a lot of sense. Makes a lot of sense because price has very little time to move away from the daily open. So what conservative filtering does is saying, okay, so we know if P1 is being put in at hour 0, then it is going to be close to the daily open. And you can see it has a massive impact because if we select it, this is just hour 0 selected. You can see how many, all the highlighted bars right here are the days that have a P1 at hour 0. So not only is it, and also look at how close it is to daily open, right? Almost all the bars here, and more than half of the bars here, so and that indicates that P1 was put in, pretty much at daily open. Almost all those bars come from hour 0. So not only do they happen the most, they also happen closest to daily open when P1 get put in hour 0. So that has a massive effect on the statistics. So say, for example, right now we include this, then what you see, if we have this percentage, if we say, okay, what percentage of days put in a P1 further away from daily open, we see 7.2%. Now we take out hour 0, which takes out all these data points that happen often in the middle, it goes to 9.2%, which is actually not that big of a difference in this case, because we're so far ahead already, but it can make a very big difference if you're more skewed to this side. It can really be a 20% difference or something in some cases. So the difference in, or let me say this first, and I cannot explain everything, it's just too much, and we don't have enough time, but conservative filter mode, and it's in the tutorials, conservative filter mode filters out hour 0 and 1. Hour 0 and 1 get filtered out if P2 is later than hour 1. Because what you're saying is, okay, we know that if a P1 happens later in the day, it's generally going to be further away from daily open than if it happens at the start of the day. So what we're trying to do with this metric is determine the probability of a P1, P2 flip, right? So we're trying to determine this probability, like what is the probability of this becoming P1 by taking out the current P1, right? The P1, P2 flip. Now we know that right now P2 is at hour 16. So if this were to happen like this, if that were to happen, then that means it happens. We have P1 at hour 16. So we know it's not going to be hour 0 or 1, right? If this were to happen, it's not going to be at hour 0 or 1 because we know that if this were to happen, the P1 is going to be at hour 16. So we could say like, okay, well, what are the probabilities of that happening at hour 16? Or not hour 16, you could wonder, why not just take hour 16? Well, that's because there's not enough data to just take hour 16. And considering that hour 0 and 1 are the most frequent occurring and have the biggest impact, and again, look at the base tutorials, because I'm not even touching upon what I want to be touching upon, but these ones have 50% or 40 or 50% of the occurrences lie within 0 and 1, hour 0 and 1. So 40% of the days or 45% of the days put in a P1 at hour 0 or 1, and they put in the closest to daily open. So it has the biggest impact on the statistics. So the trade-off between accuracy and statistical significance is, in this case with conservative filtering, okay, we're just going to exclude hour 0 and 1. And in this case, it doesn't have that much difference. But if I would, for example, press this one right here, 3%, so that's 2%. And then so this is 20.9%. Now watch what happens if I deselect hour 0 and 1. This becomes 32.4%, right? So that's quite a big difference. So what conservative filtering is doing is pretty much saying like, okay, we know that if this were to happen, it's not going to be during hours 0 and 1. We also know that hours 0 and 1, if they put in a P1, it's closer to the daily open than this would be. So why not remove this data altogether and then see, what are the probabilities that is going to happen? So that's what conservative filtering does. And now I'm going to dive into the part that I wanted to get into, but this little base was very necessary. So let's dive into it. And this, I'm also going to read some parts of the tutorial I wrote. but I'm going to dive into it a little bit more. So the main difference lies in the question that you are asking. And now I want to compare, by the way, the conservative filter mode versus the no filter mode. In this case, manual with nothing selected. So no filtering versus conservative filtering. Now, the difference lies in the question you're asking. The difference between using and not using conservative filtering lies in the framing of the question you're asking of the data. So if you're not filtering, if you have no filtering applied, like this, the broader question you're asking is, given all available data, where does price typically place P1 relative to daily open across any time of day, right? So what you're asking is here, where does price typically put in P1 relative to the daily open within this time period, right? So we have the daily open here, we have the daily close here, we have our 2 UTC here, but it's not really relevant for this one. So right here from daily open to daily close, where does price typically put in a daily P1? Whereas if you use conservative filtering, what you are asking is where does price typically put in P1 relative to daily open within this time period? And as you can see, it starts from hour 2 UTC. That's what you're doing with conservative filtering. With the side mark that price already needs to have a P2 somewhere in here, right? That's when it gets active. Otherwise, it just takes all the data. Again, I cannot just read the tutorial for exactly how it works, but the main gist of it is that this is what you're asking, right? Where does price typically put in P1 relative to daily open with this time period? So as we have seen, because there's so many P1s being put in at hour 0 and 1, this is called more conservative because this metric will go up, as we have seen, right? And the reason for that, and let me actually just show you that right here in a nice one, is that on the left, we can see there's no filtering applied. And we have 10.8%. On the right, there's conservative filtering applied, and we have a value of 16.7%. So 6% difference. And 6% is not even that much still. Like, believe me, you can have way bigger differences than this. But let's go over this one. So if you have no filtering, all data is considered. All data, including hour 0 and 1, is considered giving a broader giving a broader view that includes more frequent early P1s near the daily open. And you can see that because you have this normal distribution shape here. This leads to a lower percentage because early P1s are frequently closer to the daily open, increasing the proportion of occurrences below the input value. So in this case, the input value is negative 2.9% right here. And it simply means there's more values below that, right here, or I have to say above it in this case. So right here. Whereas here, we exclude hour 0 and 1 because the current P2 is hour 12. So it's the same as here. We know that if the flip were to happen, it's not going to happen at hour 0 1. So let's just exclude that data because we know it happens much more often close to the daily open. And if the slip is going to happen, it's not going to happen from here, from hour 0 1. We know this already. So filtering out hour 0 and 1 creates a notable gap in the middle of the graph, as P1s at these hours are typically close to daily open, right? So you can see the difference here that all these occurrences, so all these days that put in P1 this close to daily open, they're suddenly all gone because they happen at hour 0 and 1, right? So the result of that is that you have a higher percentage because filtering out early P1s shift the focus to later P1s, which are typically further from the daily open, reducing the proportion of occurrences below the input value, right? So the name conservative filtering makes a lot of sense because it increases this statistics right here because you are reframing the questions from saying, where does price typically put in P1 relative to daily open within this time period to this time period, right? So this is literally the difference. Now, because we know these ones are usually put in close to the daily open, you get a more conservative estimate because there's, you remove this, and therefore the proportion that lies below the input or above or below the input value, depending on if you're bullish or bearish, is less, and naturally the percentage is higher. Now you might be wondering to yourself, okay, so conservative filtering is conservative and gives like more conservative estimates and therefore probably less false positives. Why would we not always use false positives or have conservative filtering? And that's exactly the question I asked myself, and that's also why until now on the summary page we didn't have a filter mode available on the summary page, right? It was just there was no filter mode because I figured, well, it is the more conservative estimate. So it makes sense to go for the more conservative approach because it's going to give because, if this metric is going to be low, then that's probably the most confident signal. And therefore, it's probably always the better way to go. Now, I've done a lot of thinking about that, and I've come to the conclusion there's actually quite some merit in not applying this. And I'm gonna go over this now. So here comes the more complicated part. If you thought this was complicated, now it's becoming complicated. So sorry if I cannot follow along on this part. So you could wonder, okay, why not always use conservative filtering? And I've come to a conclusion that there's actually periods where you want to be using not conservative filtering. Now, why is this? Okay. So again, without conservative filtering, you are asking the broader question, given all available data, where does price put in a P1? So this accounts for all early P1s placed during hours 0 and 1, which tend to be closer to the daily open. The early P1s are frequent and often skew the data towards showing that P1 is set close to the daily open, which leads to signals that tend to be more aggressive, right? So this is more conservative. Naturally, this is going to be more aggressive because naturally this data is weighed towards this right here because it happens so often. By analyzing the full distribution of P1s across all hours, without conservative filtering, the probability estimate reflects a broader, naturally weighted view where the more frequent early P1s hold more weight, right? So the reason why this is lower is because these hold a lot of weight. The main way to show you that is if we go back into the distance page, and this is the thing I showed last time as well. So if I just put the input mode to manual, and I set this one to, let's even do 1.5. Well, let's do 1. Look how this metric will change depending on the P1 hours we remove. So what I just said is important, right? Without conservative filtering, the probability estimate, so this estimate, reflects a broader, naturally weighted view, where the more frequent early P1s hold more weight. This approach is inherently optimistic about P1 being close to the daily open and offers earlier signals, hence more aggressive. But before I explain that further, if we remove hour 0, bam, this thing shoots from 45 to 60%. If we remove hour 1, it shoots from 60 to 65. So, okay, we already see what I'm talking about. The hour 0 and 1 are heavily rated, especially hour 0. We go from 45 to 60, and then from 60 to 65. So we already see that the first increase by deleting hour 0 was way more than deleting hour 1. Hour 2, deleting it, no difference. Look at that. Hour 3, a little bit of difference, 66. Hour 4, 65, kind of stays the same. So you see that the difference become less. Now, why is this, right? Why is the difference? We take out 1 hour here, and it has a massive difference. And then we take out 3 more hours, and there's no difference, right? The reason for that is that naturally, this hours 0 and 1 are naturally weighing the statistics, right? So it's 50% of, or almost 50% of the days occur during these hours. So naturally, they hold a very big weight. So removing these has the biggest impact. So what I mean when I say they are naturally weighted is that this probability that you have, if you have all data, naturally tells you it gives you a holistic view, because the sheer fact that hour 0 and 1 put in a lot of P1s is a fact by itself, right? It is a simple fact, and it is a very valuable information that can be very useful to us. So basically what this is saying is that, okay, well, yes, it is skewed more towards hour 0 and 1, but the reason it is skewed more towards hour 0 and 1 is simply because it happens more often, right? Whereas if we remove that, you lose that information. So the key implication of not using any filtering is that the estimate includes the frequent occurrence of early P1s, making the signals more aggressive. However, their reliability may vary if P1 is put in later in the day. If we use conservative filtering, so we filter out, and again, it's this one right here, we filter out hour 0 and 1, which means the analysis focuses on later P1s. This reframes the data and excludes early P1s, which are both frequent and close to the daily open, as we have seen, making the signals more selective and focused on later day behavior. Now, let me see where I wrote this down because a very important aspect of it. All right, so with conservative fill, the data is no longer naturally weighted by the high frequency of early P1s, meaning the analysis narrows in on later P1s, which typically form farther from the daily open. The result is a more selective signal, one that takes into account the assumption that P1 will, and this is important, it takes into account the assumption that P1 will occur later in the day, but may overlook early P1 behavior. This is very important. The question is this. Let me just show you this. If you use conservative filtering, what you're saying is, if we assume P1 will occur later in the day, after hour 1, what are the odds it will form at this distance from the daily open, right? So for example, what are the odds from here? This part is if we assume. So you have to understand that if you use conservative filtering, that the metric that you are getting here, because you're excluding hour 0 and 1, this assumes that P1 will happen later in the day, right? Whereas if you do not use it, there's a naturally weighted probability that kind of tells you or automatically adjusts this to give you a more holistic probability on what are the actual chances it's going to happen based on the frequency. And this one just completely removes that altogether and says, okay, what you're basically saying here is, okay, P1 is going to happen later in the day. Assuming P1 is going to happen later in the day, what is the chance it's going to happen from here, right? That is quite a very important difference. So the key implication of using conservative filtering is that it provides a more selective estimate by discarding the data from hours 1 and focusing on later day P1s, right? Assuming that it will happen later in the day. This will reduce the influence of the early P1s, obviously, and the effect of it is that it could probably delay signals in a fast-moving market where P1s are common. All right, and now the next part, my battery is almost going out. The next part I'm just going to read aloud for you because this will probably make a lot more sense if I read it. Right here, let's read it together. Oh, that didn't work. Let me try again. Here we go. So the key difference is understanding the impact on probabilities. The critical takeaway when comparing conservative filtering and no filtering is how each method frames the probabilities of where P1 is likely to form. These differences in framing have practical consequences for decision making and trading. With conservative filtering, by excluding data from hour 0 and 1, conservative filtering focuses on later P1s, which typically form farther from the daily open. This creates a narrower focus, providing a more selective view because you're assuming that P1 will be put in after hour 1. The practical implication of this is that while this narrows the scope to later P1s, it also means you are removing the fact that early P1s frequently form closer to the daily open. This is what you're removing from the data, right? You no longer have this information implicitly captured in the statistics. As a result, the analysis may delay signals and cause missed opportunities in markets where early P1s, hour 0 and 1, often play a significant role. So this might already lead you to a conclusion why sometimes it might be better to use it, because we know hour 0 and 1 happen most often. And what we know is that if we use conservative filtering, we are removing that piece of information, right? We're removing the fact that early P1s frequently form close to the daily open. If you use conservative filtering and P2 is after hour 1, the data basically does not take into account the sheer fact that P1s actually occur often at hours 0 and 1. Without conservative filtering, on the other side, all hours are considered, and the probabilities are naturally weighted across both early and late P1s. This provides a more holistic view of how P1s form throughout the day, as it captures the frequent occurrence of early P1s near the daily open while also including later P1s. The practical implication of this is that while you may get early signals, the reliability can vary, particularly if P1 is put in later in the day. However, if P1 is set early and remains so, no filtering could still provide useful insight as the day progresses. This approach offers a broader perspective of market behavior. So once again, I think it's good to review this, right? And now we have all this. We include hour 0 and 1. We got a more aggressive signal because early P1s are frequently, they happen often and they're close to the daily open. So we have a lot more of these we increase the proportion of occurrences below the input value. Now, we know that this then, that's 10.8%, is a holistic view of the market, right? It's pretty legit. Where this is more a view, it's more conservative because you're assuming that P1 will happen later, and you're basically assuming that hour 0 and 1 do not put in P1s, right? That's what you're assuming in this statistic. So this statistic is just saying like, hey, given all data, how likely is this to happen? And this statistic saying like, hey, if hours in 0 and 1 wouldn't exist, how likely is this to happen? That is the difference between things. So there's then advantages and disadvantages to each method. And the main reason why I'm saying this is because until now, we have only used conservative. If it's confusing, use conservative until you get it. That's my advice. But I do think there are definitely environments where you can use not conservative, and that's definitely something I'm going to do. So the advantages and disadvantages, and again, this is in the Discord. Without conservative filtering, it's more aggressive. The advantage is that you capture the full range of data, including hour 0 and 1, which tend to place P1 close to the daily open. This may provide earlier signals, potentially offering more trade opportunities. Another advantage is that the probability estimate is naturally weighted by the frequency of early P1s, giving a more holistic view of the market behavior across the entire day. Another advantage is that the potential for a better risk to reward ratio, right? Because you get earlier signals that could provide more room for further price action and allow for tighter stop losses using P1 as invalidation. Again, this one is going to be more aggressive. So you're going to have an earlier sign that it's confident that P1 will hold, which also means that it is likely that there's more distance to go for the rest of the day, and P1 is closer. So not only is P1 closer, it is also, or probably closer, it doesn't have to be, but there is definitely more room to go in between P1 and P2. So potential better risk to reward, right? Potential, because not always the case, obviously. And the disadvantage is that more aggressive signals may lead to false positives, P1, P2 flips, particularly if P1 is put in later in the day, right? So generally how you have to see it is that this will probably, not using filter mode, will probably work worse if you get a lot of P1, P2 flips later in the day, right? That's the takeaway of it. With conservative filtering, more selective, the advantage is that focusing on later P1s by excluding hour 0 and 1, leading to a more selective estimate when P1 is placed after hour 1. Another advantage is that it provides a clear view of later day behavior, making it useful when focusing on P1s that are expected to occur after hour 1. The disadvantage is that you remove that natural weighting of early P1s, right, that we discussed, so you do not get that holistic view, and this can lead to missed signals or delayed trade opportunities, especially if P1 is placed early. And this is very important because this happens often, right? It happens often. Another disadvantage is that, potentially there's less favorable risk to reward. But I mean, the risk to reward, I would place the least importance on, because obviously it also depends on the retrace. So, then the question becomes, okay, which one would you use? And there's no definitive answer to it, but it will depend on the factors like, with win rate, risk to reward, market conditions. But in my opinion, the way I see it is that from what I've experienced, hour 0 and 1 tend to put in a lot of pivots during very trending markets. So I think, for example, that if you're here, I mean, we can just check that. I might be wrong. Let me just put that right there. Ooh, shit. Let's see. Start a trend. Hour 5, hour 1, break hour 1, hour 0, and then you move down again. So if you're here, then I would say this is an amazing looking pivot, right? And you put it in at hour 1. If I would see something like this, you're in this kind of environment, it makes a lot of sense to just say, okay, well, I'm not going to apply conservative filtering because I think, I do want to have that holistic approach right now because it looks very reasonable to assume that P1 is going to put in at hour 0. So the gist of it is that if there's a situation where you think there's going to be more P1s to hour 0, or where that just looks very good, then it would potentially work better than if you would have the P1, P2, than if you would have something that looks worse, right? Where you have a less good pivot. So for example, I mean, this is a horrible pivot, right? horrible. Didn't stay pivot for long. This is a bad pivot right here. This bad pivot. So a situation like that, you might not want to use it. Here's another one of those, right? Exactly the same pivot. You see here, bang. Beautiful, beautiful, really beautiful P1. So if you go down here, then if you don't use conservative filtering, you're going to get a signal much earlier on. It might even be that, and this is something I do not dare to say out too loud. I really have to check this, but it might even be simply because these, well, the gist of it is this. Let me put it like this. In an ideal world, we would know exactly when P1 would be put in during the afternoon or after hour 1 and when not. But we cannot know this, right? We can make educated guesses on it using statistics, using TA, using all those things. But in an ideal world, say we would know, then using hybrid filter or conservative filtering when we know we're going to get a P1 later in the day would make a lot of sense. And if we know we wouldn't, then we could definitely, then this one is going to give us way better signals. However, we do not know this. So, there's one assumption or one thing I want to test. I could see because of all the things we said, because this is a more holistic view of the data, that applying no filtering could actually work pretty well. Because it's simply the more holistic view of the data. But of course, you're gonna get probably you're gonna get a little bit more stopped out on P1, P2 flips. But you're also gonna get more signals, earlier signals when P1 is put in at hour 0 or 1, which happens a lot. But I came up, this is what I released this morning, with a little bit of a better method for this, and this is called hybrid filtering. So hybrid filtering is the hybrid filtering, and I'm gonna close up after that because I see it's already pretty late. Thank you for staying so long. This is the last part I'm gonna say. We're almost done. 5 more minutes. Let me get that part about hybrid filtering. Where is the filter mode tutorial? Understanding filter mode, open trap. There we go. All right, so the hybrid filter mode functions as a middle ground between no filtering and conservative filtering, adjusting dynamically based on the current time of P1. The key idea behind hybrid filtering is that once P1 is set after hour 1, it makes sense to exclude data from hour 0 and 1, as P1 can no longer occur during those earlier hours. What you have to imagine is that hybrid filtering acts as no filtering unless the current P1. So say you say, okay, I want to have that holistic approach because P1 and P1s happen very often during hour 0 and 1. So I do like the holistic approach, so I want to go to regular or to that no filtering. But what is the one exception where you can be absolutely sure that P1 is not going to be during hour 0 or 1? It's when the current P1 is after hour 1, right? If the current P1 is after hour 1, we know for absolutely certain that no way in hell is P1 going to be during hour 0 and 1, because the current P1 was put in later, say, for example, in hour 2. Therefore, what hybrid filtering does is it works as no filtering, as we can see here, but as soon as the current P1 is after hour 0, then it acts as conservative filtering. Then it filters out 0 and 1. So how does it work? If the current P1 is before hour 1, then or hour 1 or 0, then hybrid filtering acts the same as no filtering. So that's what we see right here. And if the current P1 is after hour 1, then hybrid filtering will exclude data from hour 0 and 1. This means that in this case, it acts the same as conservative filtering. So if we see, for example, here an example where the current P1 is at hour 12, we can see here it automatically filters out hour 0 and 1. Again, this is because once P1 is after hour 1, so this could be hour 2, could be hour 3, we know for certain that P1 is not going to be during hour 0 or 1, right? So then it makes sense to filter it out. then it makes sense to filter it out. So you can see that, and that's why it's called hybrid filtering. It is working as no filtering as long as P1 is during hour 0 and 1. But if P1 is after hour 1, then it starts filtering out hour 0 and 1, and it effectively becomes conservative filtering, which is why it's a hybrid. It is either or. It's either no filtering or conservative filtering, depending on when the current P1 is put in. So the reasoning here is that after hour 1, it is impossible for P1 to be placed in the earlier hours, so this data is no longer relevant and can be filtered out. By combining these two approaches, hybrid filtering ensures that early pivots, hour 0 and 1, are only considered when they are still relevant. It is important to note that it does not matter if you have P1 or P2 automatic select for this filter mode, because if current P1 is after hour 1, then obviously P2 is also going to be after hour 1. That's the simple fact, because P2 is not going to be before hour 1. So once again, to recap that, we have now explained everything about the filter mode, about conservative filter mode and normal filter mode, when to use normal filter mode and conservative filter mode. Again, there's a whole tutorial on it. I definitely recommend reading it further, but the gist of it in the end with hybrid filtering is that you can say, if you're leaning more towards manual filtering, what I would suggest is to use hybrid filtering, because that is basically manual filtering. But if P1 is after hour 1, then we can for sure say, okay, no longer is P1 is there a possibility P1 is going to be during the first 2 hours, hence we can remove it, right? And then you get that more conservative estimate, which at that point is a realistic estimate, right? Because we know that if the flip's gone, it's already later than P1 and P2. I'm just looking to see, I think there was Matic. Yeah, here you can see it well. So Matic, P1 at hour 10. If I have manual selected, so no filtering, all the data is considered. But we know now that P1 is not going to be at hour 0 and 1. So now it actually makes sense to filter it out, and that's what hybrid does. So hybrid now acts as conservative because P1 is after hour 1, and then we can see, bam, we get that higher value. I didn't even check, but I assume it was higher. Yeah, 10% higher. And that's more realistic because we know P1 is not going to be during hour 0 and 1, so we can filter it out. And this will now act the same as conservative filtering. So if I press the conservative, will be exactly the same, right? Because as long as if P1 is put in after hour 1, hybrid filtering works the same as conservative filtering. If not, it works the same as no filtering. So I know that was a lot, but I hope it makes sense. Hello, Yelena. How are you doing? Hope you're good. We're just finishing up. There was a big session, 1.5 hours. Sorry if that was a little bit long, but there's no way to explain it shortly. I will be making a video tutorial that will be more compact. For me, it's also good to kind of explain this at first, because it's kind of like a test round. But I would really suggest going into this filter mode, because I do think, again, if you're not sure, just use conservative. But I definitely think there's a good case to be made for definitely the hybrid. I would not use no filtering, right? So on the summary page, we have the same thing. I would never use no filtering, even though it's possible. I would use hybrid or conservative, right? Because the hybrid just makes more sense. And you will see now, and now you will understand why conservative gives less signals here than the hybrid, or none. Let me just wait for this to load. So here, not that many signals, and then we switch it to hybrid. And then what we will probably see, bam, lots more signals, right? And now you know why. Now we know why. So there's not necessarily one that is better or worse, is the thing I want to say. This is why I included it now. But it really depends on, the market environment, your system, and possibly, I do have the theory that on the long run, hybrid filtering might actually work pretty well. So but I cannot make any definitive conclusions on that because I haven't tested it enough yet. But I will be paying attention to it, obviously. So we will find out soon enough. Final words on that. Let me see. Yeah, when choosing between conservative filtering, no filtering, or hybrid filtering, it's essential to consider not only your trading style, but also the current market environment. And it's also important to note that while conservative filtering might seem like a safer option, this isn't always the case. The right approach depends on the specific context, your risk tolerance, and your trading strategy. The goal is to understand the nuances of each method and apply the one that best aligns with the market conditions you are operating in. With that said, I would suggest if you still are not sure to just use conservative filtering, probably the best way to go. But there is advantages and disadvantages to both methods. And in the end, I want this to be a statistic platform. I want there to be room for creative, creative decision making also from the user base. And I do think this is one step into that direction where the user can, play around and kind of start getting familiar with their favorite settings. So I think that's a good note to close it at, because that was a ton of information, and I don't think we want to be discussing a whole lot more. Plus, we went over my mark of 1.5 hours, and yeah, the 1.5 hour mark is the magic mark. Longer than that, and everything just becomes very incomprehensible. Kaibon, yes, it's already online. I think you can look it back right now. If you just rewind, then you can see it. But yeah, this was a more complex one, but a good one though. I went into filter mode deeply, which is was the main thing in this stream, because there was simply not a lot of things happening in the markets in terms of trades and whatever. So we just discussed some content. So everyone who stayed with me for this long, thank you very much for listening to that whole rant. I hope your head didn't explode. Mine's still there, little headache, but we'll be good. And I think that was the last stream. This was number 3. So the next stream will be next week. Tomorrow there will be the schedule. So looking forward to that. And once again, thank you very much for joining. Thank you very much for your attention. And I will catch you in the next stream, catch you in the next Discord, or I'll catch you in the Discord. And I know this was very complex. So if you have any questions, please drop them in the Discord. Just ask them, because for me, it's also very valuable to know what the questions are, so that I can improve the tutorials and whatever needs improving, right? Because this is a more complicated subject, and I can imagine that there's going to be questions on this, but I do think it is valuable to understand it. And I want to emphasize, though, that this is an advanced concept, so make sure you understand everything else well first, and then go over in in what we just discussed for the filter mode, right? So don't worry about it if you're just starting out. If you're just new, don't worry about it yet. Make sure you understand the rest first, and then go into this. All right, guys. Thanks all. Have a wonderful evening. Have a good end of the week. Good weekend. But I will still see you tomorrow.